Good afternoon. I'm Jim Spencer. I am with the Bluefield, West Virginia Economic Development Authority, and we're proud today to have Business Planning 102. We're thankful to have my good friend Harold Patterson here, who is a business coach with the West Virginia Small Business Development Center. He taught last week the 101 session. Looking forward to the 102 session. And a lot of times people I've talked to, they don't have a business plan. And to be honest with you, if you don't have a business plan and you're starting a business, I think you're setting yourself up for failure. Even if you already have the funds that you need for the business plan can give you guidance and direction, and also a checklist of things that you want to accomplish this year and things like that. And then you can review your plan to see if you're meeting the goals and metrics you set forth for yourself. So we're excited about this, looking forward to this, and it's one of our sessions that will be recorded and put on our digital library. And we love having that kind of content so that people can access that 24/7. Thank you, Harold.
Thank you, Jim. Thanks for the introduction. Welcome everybody back. Last week's class, and we're going to start with the slide about financial projections. I talked to you about the startup checklist, capital and expenses, and I talked to you about the cash flows, profit and loss statements, and balance sheets. I'm going to show you some examples of those. First one is a worksheet that we've kind of come up with. And if you notice on the very top, you put your company name in. Right underneath that, they're asking for what your contribution toward this project is going to be, and also any partner that you have. Whether it be just an investor or somebody who's actually going to co-own the company with you. So anybody involved in your company that's investing in this project, putting in money and stuff, that's where that would go in that section. Next, we have the bank loans. What we'd be looking for from the bank in that section, whether it's one bank, two banks, or whatever. The other loans, the other source loans would be from like an EDA or a regional development authority or something like that. So in that first section, we're going to add up all the money that we're looking for. Now, how do we figure out how much money we need? That comes from the next sections, the expenses. And we break those down into individual categories also. First one, building and real estate. And it says, think outside. Buying the real estate and fixing up the outside of the building, whether it's actually building the building or remodeling the outside of the building. That was what would go in that section right there. Next section is leasehold improvements. And that's where you think inside, whether you need to remodel, paint, put down carpet, resection it off, put up walls, things like that. That's where we would put that kind of money in that section right there for what we would need. And then the next one is capital equipment, any type of furniture, fixtures, machinery, equipment, things like that that you would need. That's where that would go in that section. Second page, location and administration expenses. Try to keep these down to about 3 months or less. When you're looking for rent related costs, of course, utility deposits, legal accounting fees, prepaid insurance, pre-opening salaries. And I get a lot of questions about that. Can I pay myself? It's kind of frowned upon, but yeah, you can. Pre-opening employees can go in there. If you have engineers that are involved in your project, pre-opening salaries would go into that section right there. And office supplies. Total that up, that's what we're going to use for location administrative expenses. Opening inventory. What's going to be on your shelves if you're a retail store? That's that section. Advertising and professional expenses. You got to have signage. You got to have some printing stuff done. You got to have letterhead. You got to have business cards. You got to have all that kind of stuff. Also, your travel and entertainment would go into that section too. Any type of pre-opening travel that you would have to do to go see your lawyers, your accountants, your other business partners, your resource partners, whoever, that's where that would go. You put money in there for that. And then other expenses, that's a broad category, but anything that don't fit in the other ones, we're going to put in there. Then we're going to start totaling up all those different expenses. And when we get to a grand total of those expenses, now we can look back and see how much money we actually do need from the banks, the programs, and from yourselves. Those two should total up pretty close to each other. Okay, there can be some working capital in there. Most working capital is 10% of the project, or about 3 months or less, is what we found out that most banks like, or most programs like to see. I've had requests from people for 6 months worth of working capital, a year's worth of working capital, and usually that gets frowned upon. So think in terms of 3 months or less, or 10% of the project. If there's any questions on any of that, please feel free to get a hold of me. Okay, the next thing we talked about is our profit and loss and our cash flow last time. This is what the profit and loss looks like. It is a month-to-month look at what your income and your expenses are going to be projected. These are good, educated guesses that we use at this point, especially in a startup situation. And again, these are month to month for a profit and loss statement. I'm going to show you cash flow. It's going to look the same because it does take it month by month, but let me show you some differences. And usually when I'm doing your financials, this is where I start, is on this page. Once we know how much money you need up there in the loan section, then I can come here in your pre-start position, first column, and that's where I'm going to tell the organization how we're going to spend that pre-opening money. Okay, we can use it for any of these different categories: capital inventory, capital purchases and inventory purchases, whatever loan fees you're going to have. All of that is written into that first section. Okay, now you can see I've already got some numbers in there, and I've got a loan over there of $40,000, $45,000. And then I start taking out some of the expenses along the way. So I got $13,500 for capital purchases, $650 for inventory, $650 for just supplies in general. And I ended up with a total down on the bottom of $30,700. In all honesty, that's way too much money left in the opening position. Okay. If I'm asking for a lot of working capital, the program or the bank's going to kind of frown upon that. So that's a mistake. That's one of the first things that they would look at and say, "Woo, wait a minute, where's this money going to be spent at?" But for our purposes, let's look at the cash flow. The 30,000 goes up to the first month, 30,700. The income part, you're going to have 7,500 come in for a total of 38,200. Sorry. To start paying your expenses with. And then we're going to bring out all your expenses. Expenses are going to total up to $3,500, a little over $3,500. Take out some taxes, take out some other owner's draw, stuff like that. And at the end of the month, you should end it up with 33,000 in the bank. You started with 30,700 and ended the first month with 33,000. So you actually ended with a profit. That goes back up to the next month. Same thing happens. Income comes in, expenses go out, and at the end of the month, you're left with a number. That number goes to the next month. So you can see that it is a cash flow all the way through the year. Bankers are going to look at this to make sure that you have enough money for the good months and the bad months in your cycle. Once we start working on this, we'll go back to the profit and loss statement. Profit and loss statement looks at the months individually. Now, for this purposes, there's a few differences in the months because I knew you guys were food truck guys. I broke your income down into just regular events and fairs and festivals. That's the only way I could think about it at this point. I said that generally through the month, just a regular event, you've scheduled to be at a location during the Monday, Tuesday, Wednesday, whatever, and you're going to make approximately $6,000 in income just from regular events. Fairs and festivals, I figured a couple of months, $750 a day going to a fair or festival, some local thing that's put on in one of these small towns or something, that you should do about $750 a day. That's $1,500 a month. So I'm guesstimating that you would bring in about, in the first month, May 23, $7,500. Next, we look at cost of sales, and that's just the cost of sales of doing business. If we go back to where'd I put it? Oh, location administrative expenses. Cost of sales would end up a lot in here, especially with office supplies, salary, some salaries, some fees. If there was like, we could break that out if you wanted to individually, but if you wanted to put the fees in that, you could do that. Some inventory could go in there, different types of inventory. It just really depends on what you bought it for and what you're using it for. So cost of sales about 30%, and that's pretty typical on a food truck. Subtract those out, you got $5,250 to pay your expenses for that month. When we look at your expenses, we start with the salaries, your salary, employee salaries, and what expenses are those going to cost. Usually we put in about 25 to 30% on payroll expenses. So based on what your employees are making and how you incorporated yourself, your salary could be included there too. We'll deduct for payroll, and like I said, that's usually about 25% of those two numbers. Supplies, think office or truck supplies in that situation. You had to have fuel for the truck. You had to have some advertising, Facebook, whatever. You had to have some accounting and legal. Somebody's going to do your books, usually about $75 per business a month. Telephone, which is probably going to be a cell phone. You get a package for $100. Utilities, you gotta cook, you gotta prep, you gotta do all those kind of things. So you're going to have some electrical, you're going to have some water, you're going to have some other stuff. Utilities, $150 a month. Your insurance, based on how much liability insurance you have, how much insurance you have on the vehicle. I just threw a number in there, $150. Taking credit cards, swiping debit cards, things like that, banks are going to charge you. So we put in $225 for that, and then miscellaneous $100. Total expenses, $1,138. Your interest after you subtract those two out, you got $4,113, and that's before your taxes. So we put up some taxes here. We take out some taxes, usually at about 25% in that situation. And also in a profit and loss, we look at your interest. We don't look at the principal on any loan. So your interest on your loan was going to be, in this point, $281 for that month, with it leaving you a grand total left over of $2,873. That's not close. That's not typical. These are just numbers I kind of randomly threw in there. Okay. Don't get excited and say, wait a minute, I can do all this and make $2,400 a month. It may not happen. You may have to hire somebody. You notice I don't have anybody in there for salaries. I don't have any money coming out for you. So that's just some numbers we throwed in. A lot of times if you are sole proprietor, if you're a sub S and you've incorporated like you're going to be taxed like you're a sole proprietor, or if you're an LLC and going to be taxed like a sole proprietor, down here on the bottom is where your salary would come out. Withdrawals and dividends and owner's withdrawal would be whatever amount you wanted to take out of that business per month. Again, we do this. These are the templates that we actually use. Takes me a while to play with them because I've got to go find out what are the ratios that are nationally looked at in that type of industry that you're going to go into, and make sure that your numbers are close to those industry standards. Everybody confused? Trust me, it took me a long time to figure it out too. In the cash flow, I will show you this. In the cash flow, not only do we look at the interest, but we're also going to look at the principal. It's just the way these break out. It's just the way the bankers want to see them. In the cash flow, we look at both. In the profit and loss, we just look at the interest. We don't look at the principal payment. Okay, remember we talked about business organizations, and we talked about the differences of those 4 organizations. If there's any questions, again, get back to me on that. If you want to discuss what's best for you, we'll sit and talk. We'll go over the different areas. I'll point out good things and bad things for you, and we'll let you decide as to which one you want. Some of the things that usually affect what you choose are listed on this board now. Do you need to protect your personal assets? Again, remember, if you're a sole proprietor, you are the business. Your house, your car, your kids' college account, your retirement fund, everything is tied up in that business because you are the business. So if you need to protect that, then you might look at an LLC or a sub S corporation. How do you want to do your bookkeeping? How do you want to be taxed? Basically, are there more than one owner in the business? How does the owners want to split up the liabilities? How does the owners want to split up the assets? That'll decide. How do you want to be compensated? Again, back to the taxation, back to, if I'm in an S corporation or an LLC and I choose to be taxed like a corporation, then my salaries can then I can be looked at as an employee. My salary can be looked at as a cost of doing business, and we can deduct that as a tax deduction on your 1040. And also, and I think we talked a little bit about this, transferring the organization at the time when you're ready to retire, or if something else happens, such as death. Sole proprietorships cannot be transferred. Their assets can be sold to someone in the family or someone outside the family, but a sole proprietorship will end when you decide to go out of business or something happens, such as death. LLCs, sub S corporations can perpetually go on forever. You can sell your part, you can sell the company, you can sell things inside the company, you can sell part of the company. So how do you want to transfer it? That could play into how you want to incorporate. Okay. Last time we also kept mentioning that you need to put together a team of people. And a team of people is just trusted advisors that you can go to that when you run into trouble, such as legal issues, do you have a lawyer that you can pick up the phone and say, hey, I need to come in for a consultation? They cost you a few bucks, but if I were you, I would talk to somebody ahead of time and say, hey, can you be the guy that I pick up the phone and call? Accountants, who's doing your books? Most of the time, when somebody asks me about an accountant, I'll give them 2 or 3 names, but I tell them to interview the accountant, ask them questions, make sure you're comfortable with that person. Make sure that person will take the time and explain, explain to you what that cash flow is, what that profit and loss statement is, what an income statement is, what a balance sheet is, how do they affect your business, what happens, what is happening inside your business when I'm looking at those different statements. One of my clients handed me a profit and loss statement one time. Was actually cash flow, I'm sorry. And he said, what can you tell me about my business? Took 5 or 10 minutes, looked at him, and I said, somebody's stealing from you. He said, how did you know that? I said, I know that, but how do you know it? I said, well, it's pretty simple. Your sales are going down. Your inventory not only has stayed the same, it's actually raised a little bit. And I know you don't have a room here with a lot of stuff in it. So that inventory that you're purchasing is going somewhere, and it's not going to you. So somebody has to be taking it. Put up some cameras, come to find out he had an employee stealing from him. So those statements can tell you or give you clues to things like that if you look at them. Can also, again, I mentioned the ratios, can also tell you how do I compare to the national companies doing the same thing? If my ratios are comparative to theirs, then I should be successful. If my ratios are not as good or not where I want them to be, then I need to make some changes to see if I can get this business up and going. So make sure you interview the accountants and make sure they're going to take time and talk to you about those different things. Insurance agents. Again, there's a ton of different insurances out there. Key person insurance, renter's insurance, fire, theft, auto, liability, different types of liability. Make sure your insurance agent talks to you and you are fully aware of the type of insurance that you have and what it covers. Make sure they're ready to take the time and talk to you. Your banker. Everybody loves the banker when it's brand new and they give you the money to go into business and the grand opening happens and the ribbons get cut and the balloons go off. 6 months down the road, if there's a problem, the banker is the last guy you really want to talk to. But he's actually one of the first guys you need to talk to because he wants you to be a success, or they want you to be a success, sorry. Make sure that you keep your banker informed in the good times as well as the bad times, because they can help you figure things out. They can sit down, they can look at your spreadsheets, and they can say, hey, let's change this, let's try this, and let's take this business in a different direction. Marketing professionals. Who's putting together your marketing campaign? We're going to talk about marketing here in a minute. But, maybe you want to change. Maybe you get into the business 3-4 months down the road, you want to change some things, and you just don't like the way things are moving, the type of clients that you're getting in. So maybe you want to change your marketing. Make sure you keep a good relationship with that guy, with those guys, and you be able to talk to them and be able to make changes quickly. I'm stuttering and stammering around here today, but in all honesty, SBDC coaches are a good source. Not only do they have themselves, we have a team of people that have a lot of different backgrounds that I could actually call up and say, hey, I've got this problem, got any ideas? And not only just the SBDC coaches, but I have the EDA people in the area. Jim Spencer, great resource, ton of knowledge in that head. And he's got people around him that are very bright and very professional at what they do. So we can get you help. We just can't get you help at the last second. Keep us informed. Talk to us. If you start to see things go bad, don't wait. Call us up. Hey, got a problem. That's what we're here for. Okay. So we're going to talk about marketing. Basically, in your marketing plan, start with who your target customer is going to be. You can break them down, and I've got that listed by sex, by age, by income. Are they parents, grandparents? Where are they located at? If you dropped a pin into your location and drew a circle, how far out, excuse me, would that circle go? Is it going to be a 50-mile radius? Are they going to drive 50 miles to get to you? So you put it and draw that circle. Okay. Usually around here, we talk about drive time instead of mileage, because it's only from Bluefield to Welch is only about 35 miles, but it takes you over an hour to get there. So drive time, we usually look at as about an hour. So if you drop a pin in your location and you say, okay, within an hour, I've got this many people in that location. My target customer, I talked to, well, let's just use the food truck. Let's go, let's keep going there. And my target customer is going to be, during the day, the business professional who's in an office that needs to get something quick. They can't stand, they only have 30 minutes for lunch, so they can't stand around waiting on me to prepare it. And most of them are going to be female in that situation. Any other criteria that the audience would like to throw at me? Young professionals. Okay, so I've got that type of person that I'm looking for. Now, the next thing I got to do is I got to say, what's my unique selling point to them that gets them to my food truck? My unique selling point. My food tastes good. That's a good thing. My service is fast. That's probably what they're looking at. So if you got a combination of fast service, good food, and trust me, that's what McDonald's built their whole premise on in the beginning. They're going to give you a try. You'd have to pick the location back to your target market. You're going to have to pick a location that they can either walk to you real quick or have a very short drive. So we're looking at that kind of thing. But if I'm identifying my market and I'm identifying my unique selling point to that person, and I'll go away from the food truck right now. I tell this story quite a bit, and this gets into the psychographics of marketing. Back years ago, I was doing some work at home, and a commercial came on television, and I heard the opening notes of a song that I grew up with. It was Bob Seger's Like a Rock. It was Chevy trucks, and it caught my attention. I actually quit what I was doing, and I looked up to the TV, and I went, wow, they used that song. Didn't know a whole lot about marketing back then. Recently, I was doing something, TV was on, and another song started playing, and it was Tedeschi Trucks Band. Most people don't know them, but again, caught my attention, and I'm thinking, wow, and it was Chevrolet trucks. And I started asking myself, who are they trying to sell to, guys? 2 songs got my attention. Middle-aged, middle income type individuals that they're trying to sell their trucks to. And if you notice, starting back in the late 90s, early 2000s, most mid-level managers started driving pickup trucks. So that was their target market. And they were using that song to get inside your head to get you to pay attention and go buy the vehicle. And a lot of guys did. So they found out who their target market was. They found out what the unique selling point was. You know, they tried to appear to an image of this free-spirited, tough, young type individual is what they were looking at. As far as unique selling point for a female, let's look at it like that. Back in was it 90s, I think, back in the 90s or even 2000s again, Michelin Tire used to have a commercial, and at the end of it, they would have a baby sitting in the middle of a tire. They were appealing to the moms. They're appealing to the females, getting inside their head saying, we're going to protect that child the way you would. If you ask women, most women now, even now, will tell you, if you say, what's a good tire? What's a good brand of tire? They're going to say Michelin. If you ask a guy that question, they're going to say Goodyear. Why? Goodyear presented themselves as a racing tire. So most guys bought into that. All they did was try to get into your head with that unique selling point. Once you've kind of got those things together, who your target market is, what's your unique selling point, then you can start developing your advertising. The things that I just talked to you about, they started putting those things together. I'm going to use this song. I'm going to get their attention. I'm going to show them pictures of the truck out four-wheeling. He's going to be going up, steep slopes, dirt roads, that kind of thing, just really to get inside your head. They use the image of the baby to really get inside your head. And what I suggest is, if you really want to try to understand this, look at commercials. I know most people don't, but look at commercials and ask yourself one question. Who are they trying to sell to? And what are they really trying to sell me? My last example I'll give you is security systems. Every commercial you see is usually at night, or the person, usually female or kids, is home alone and somebody's trying to break in. Now they're selling to the female, saying, we will protect you because the alarm goes off, cops or whoever shows up. They're trying to sell to the female, but they're also trying to sell to that dad who may be out on a sales trip or away from home. They're just trying to use those images to get inside your head. And that's what you have to do with your advertising part. Are you going to put that on traditional media, paper, newspapers, TV, magazines, things like that? You have to decide, is it better suited for that? Ask yourself a question. My target market, back up here, where do they get their information from? Okay, do they get their information watching the TV, listening to the radio, reading the newspaper, in the traditional sense? If you're going to go to the social media, and we're going to talk about that in a minute, which one of those social media platforms are they actually on and using? Okay, last thing there is budget. Nobody ever puts money out there for a budget for advertising. If you noticed back in the cash flow, I had in, what, $100 a month for some advertising? Not a lot of money, truthfully. May buy you an ad on Facebook, and it may do something locally, but it's not a lot of money. Most people don't put a lot of money into advertising, but that's where your customers come from. Okay, marketing tools. And a couple of things that we're going to talk about here. Your signage is a tool. The way your storefront looks is a tool. People look to see, is it clean? Is it neat? Your signage, can they find you? I've gone to some places, people have called me up and said, hey, come to my business. And I've literally searched for 15, 20 minutes trying to find the business because I couldn't see the signage. So make sure your signage is out there. People can find it. and it points to where your location is. Um, make sure that anything that has your letterhead, I mean, any letterhead, any business cards, any printed materials that you have, brochures, whatever, or even if you have a product that your company is stamped on, make sure it's all a consistent message. It all kind of looks the same. The colors are the same. Make sure that when you do your branding in that situation, it all works together and it's all very neat and professionally done. Down here on the bottom, because we've kind of talked about advertising promotion, but uniforms. Most people don't think that their uniforms are an advertising tool, but they are. The way your employees are dressed is a reflection upon you and your company. So if you need that type of thing, at least t-shirts, shirts with collars, things like that, and clean jeans or things like that, make sure everybody sort of looks the same when you're doing your presentation to the public. Any questions from the group on marketing? Any thoughts?
Hey guys, this is Faith Blackwell here with Beta. Just a note that I had thinking through these points was when it comes to storefront, in many of your cases, if you're watching this video, you're in the Food Truck Incubator Program and you wouldn't necessarily have a storefront yet. You would just have your food truck. So just something that came to my mind was how important it is for that food truck to the branding that you have, the signage that you have on the outside of that food truck to be consistent with your social media, your advertising, your uniforms, all that. And Harold can speak more to that as well.
Yeah, Faith is right on with that. I think there's going to be space, Jim, on the food truck for a magnet sign. That can be professionally developed. There's people out there who do that. And again, make sure that that sign looks like what you have on Facebook, or Instagram, or whatever you choose to do. Make sure it's consistent. Everybody knows what those golden arches mean when they look at it, right? That's what you're trying to do. You're trying to get that stuff inside their head that when they see your sign or your logo or whatever, trademark or whatever, they know it's you and they know what type of food to expect, because that's what, same thing McDonald's did. I know when I go into McDonald's what type of food I'm going to get and about how long it's going to take me to get it. Well, sometimes they're a little slower, but they used to be pretty quick. If you have any further questions, just let us know. Okay, online marketing. Your website, your social media platforms, email marketing. Everybody gets a ton of those things. And God forbid the texting that you get. But all of it has to be consistent. And that's the main thing here. We can dive into as far as your website being tied in with your Facebook and your Instagram. Your postings on Facebook can also be posted on Instagram because basically they're one company. Is Facebook right for you, or is Instagram right for you? Well, it goes back to who your target market is. Most older people look at Facebook. Most younger people are on Instagram, TikTok, Snapchat, things like that. So based on the age range, then that's where you're going to put your social media. But everything should be tied back to your website, and you really need one. Even if you are a food truck, they can go on, make an order, pay online, pick it up, and be gone. And they're looking for speed, guys. COVID's changed the world. You can do that at Walmart now. Put your order in while you're working. After work, get in your car, go set in the lot, dial them up, say, I'm here. I'm setting in whatever number it is, and they'll bring your stuff out to you. load your car, and you're on your way home. I keep telling this story if we got time. Somebody should fix up a situation to where these working women who have families or whatever can actually order from you like around 11 or 12 o'clock that day. Their dinners that they can actually pick up after work and take home. All they have to do is find you wherever you're at and either pay for it or have it already paid for. They go home, warm it up, boom, dinner's ready. It could work. I'm telling you guys, it could work. But anyway, keep a consistent message. That's the main thing. E-commerce. Some of the things to think about, we've kind of talked about, but it's down here on this one is what I want to show you. All right, or on these right here. Identify the different channels that you're going to sell your product or service, again, based on who your target customer is. What are your expectations of sales? Are you going to ask the person to buy from you? Are you going to ask the person to buy your service, your product, or whatever it is? Most people don't, most salesmen rather, don't ask the customer, are you going to buy? Or you think you're going to buy? Are you willing to buy? Closing the deal is something that a lot of people, a lot of salesmen don't understand. And there's books written on that. So what are your expectations of the sale? How will you take your order? How will you process your payment? And how will you fulfill requests? Okay. Think about that when you're starting not only your advertising, but your website, your Facebook stuff. How are you going to do all this? Okay. That's where that marketing person, website development, and all those guys come into play when you start sitting down and you start talking to them. One of the problems I've had lately with websites that I've looked at, especially in a restaurant situation, a lot of times they don't have pictures. They don't have descriptions of what they're trying to sell, and they don't have prices. And people are going to look for that kind of stuff. You can actually get away with not being able to take an order online, but you got to have that stuff. You got to have pictures of what your product looks like. You got to have description of what that product is, and you really need to have the price, the current price of what that product's selling for. So if there are any questions, just bring them to us. Okay, another thing, back to nobody asked for the close, nobody asked for the sell. Describe your sales process. Write down, how do you want to interact with the customer during the sales process? Do you just want to go, like the soup Nazi, next, that kind of thing? Or is there a way that you want your people and yourself to take the orders, to interact with the people? Write down the sales process of what you want that to be in your mind. What are the obstacles? What if people have complaints? How are you going to handle those kind of things? That goes into the customer service strategies. If I do have a complaint, I ordered something on this taco, it's not on the taco, and here's your taco back. How are you going to handle it? You see those pictures on social media all the time now where the customers are irate because they got their food order wrong. So how are you going to handle it? These are the things that you really need to sit down and think about and write out for yourself before you ever get into business. Think of your own situations that you've had in the past where something went wrong. How did they handle it? Either copy from that, improve on it, change it the way you want it to go. But always remember, you do have a bottom line. And your bottom line when you start fulfilling these things, your profit is going to be eaten up some. Okay. Operations planning, I got you some really nice words there and things that you can look at, but the bottom line is right there on the bottom. Think job descriptions. What are you going to do? What's your employee going to do? What do you expect them? What do you expect their day to look like? Think job descriptions. What's your job as a manager? Is it just to walk around and shake hands with the customers? If it is, you're going to be out of business in a few months. Think about what your job is and write down your job description. Write down the person that you hire, even if it's a front cash person. Again, how do you want them to interact with the customer? How do you want them to exchange the money? How's your accounting system going to work up front? Okay. So think job descriptions when you start thinking about your operational plan. That's about all on that one. Okay. Licenses and permits. Doing pretty good. The first thing I listed was city business license. In all honesty, that's not the first thing you do. You really need to get the state license. Is that on the next one? Nope. Thought I had it on here. Okay. You really need to get your state license first and then take it to City Hall and then get your city license. State license usually going to run you on a sole proprietorship about $35 a year. On an LLC or an S corporation will run you $150 a year. City licenses for Bluefield are how much, Faith? 25? Okay, about $25. Usually about for what a sole proprietor is in the state. Business and occupational tax, that is not a tax that you send on to the customer. That tax, business and occupational tax, is based on the sales that you have inside that incorporated area. If in a food truck situation, you're spending 3 days a week inside the city of Bluefield, and then the other 3 or 4 days a week, you're spending in another area, you really need to keep track of the sales that you're doing inside the city of Bluefield and pay your B&O tax on that sale, those sales. Your other sales won't be included in that. Your county sales there's no B&O tax. There's a B&O in Princeton, there's a B&O in Bramwell, Athens. Just trying to think of the cities. But anyway, if it's incorporated, it probably has B&O tax. So keep track of where you're at and the sales that you have in each individual city. That way you can pay their B&O tax. In the county area, there's no B&O tax. Check to see if there's any zoning that would prohibit you from setting your vehicle up. They'll tell you real quick, you can park here or you can park there, but don't block traffic and don't block pedestrian walkways. So check and make sure there's zoning. And also listed city sales tax. The state is going to charge you 6%, or the state's going to charge the customer 6% for ordering. Some cities now have added another 1% charge on top of that. So it's actually 7% in some cities. So you need to check with City Hall when you get your license from them. Do you have that extra sales tax on top of the state tax? So make sure you do that, and that'll all be deducted by the state and sent back to the city. Are there any particular industrial licenses that you need? In your situation, food handler's card is the biggest thing. Health permits are extremely important. When you do the food truck for Jim, I think he'll have a health card or health permit there, posted in the truck. But once you start doing your own thing, the health department is going to have to look at your place of business, your truck or whatever, and give you the permit. So make sure it's posted once you get it. And make sure your food handler's card is handy in case anybody asks for it. Okay, any thoughts, any questions, any additions that you want to make? I think Jim has some additions.
With the Food Truck Incubator Program that we're running, a business plan is required.
Right.
It's not optional, it is required. Because like I said earlier in the beginning, I think if you don't have a business plan, you're setting yourself up for potential failure. Your first business plan will be for the 10 events that some will be using the truck and going out testing their food, their service, things like that. And you have a business plan for the operation during that time. Once you have real sales data, then Harold and the team will work together to help you put together a final business plan that you could actually take to a bank, microloan, investors, others that will help you get the funding you need for the program, but or starting your own business. But the biggest thing I want to remind you is a business plan is required. If you do not have a business plan that's been submitted and accepted, then you're not going to be able to use the truck. That's just being straightforward on that. I think there's a lot of times that folks in their business think that, well, everybody will love my food. And if you've been around very much on the Food Truck Incubator, you've heard me use an example that I grew up and my mom sometimes would make peanut butter, mayonnaise, and sweet pickle sandwiches. And I like them, but I'm probably in a very small minority in the United States that if that's my key food that I'm selling on my food truck, I am in trouble. So sometimes another thing as part of your plan is to think about the food, the ingredients, and maybe test that food on some of your friends and family that will give you honest feedback. Because if one of the best ways to fail in the food industry is to not meet the customer's expectations. So I think, Harold's done an excellent job in laying this out. We will continue to help. I encourage everyone to take the My Own Business Institute. We've got several that has graduated from that. His outline went straight forward pretty much from that training. So this goes along with that. And if you're interested in us doing a follow-up session or one-on-one coaching, please let us know. Harold, thank you very much. Is there any closing comments you have?
Yeah. What I tell everybody is you're not in this alone, guys. I went through this pretty fast, and don't let it scare you. We're here to help you. Again, back to your team. I'm a part of your team. Jim's a part of your team. Faith is a part of your team. We help you do these things. Okay? If you get stuck on an area, that's where I'm here to help you. I know a lot of people aren't good with putting a lot of words together. Put bullet points down in those questions that we've sent you. Put bullet points down. We can put words with it later. We can talk through your thoughts. We can talk through what the questions are actually asking, and we can get you straightened out to where you're going to have a business plan that is a projection of what you think is going to happen. It's an educated guess at this point, but we'll be pretty close. So again, thank you for everything. And if there's any questions, please feel free to reach out. Take the survey. Faith's going to talk to you about that here in a second. So, Faith?
Yes, thank everyone for joining us today. And if you're watching this on YouTube, please feel free to take the short class survey. It just takes 1 to 2 minutes to complete. It just lets us know how we did and how what classes might best serve you in the future. Again, for any future workshops, you can find those at our websites, mybluefield.org/workshop. So again, thank you for joining us today and have a great day.